And we've got a really exciting presentation now. We're shifting from Kenya, an investment in Kenya, to investment in Rwanda. And we have Michael Bookstaber from hello, how are you, Michael? Nice to see you.
Nice to see you too.
Great. It's really lovely to have you here and really looking forward to this discussion. We are in Kigali and we have an audience that is spread across the world and lots of interest in the discussions and the sessions that have been presented. I'm really interested to hearing about your presentation and the work that you've been doing in Rwanda. And maybe you could just start by just a quick introduction, and then I'll leave it to you to make your presentation. I'd like to just welcome everybody in the audience to please log your questions into the chat. Michael, you'll have a little bit of time at the end to answer some of those questions?
Yes.
Excellent. Okay. Well, we're looking forward to it. I look forward to hearing what you have to say. Thank you.
Okay. Just a small correction as we go forward. I noticed that the caption shows me as Michael Bookstaber, which I am, but my firm is Global Housing Strategies.
Strategies.
Yes, strategies.
We were being assertive.
As you'll see from the slides, I'm a partner with a group of people, and we call ourselves Africa Housing Partners, and you'll see that on the slides in a minute.
Excellent. Thank you.
Okay. So I'll get a start and then share the screen so you can see the presentation. Good afternoon, everyone, and I'm grateful to the AUHF and to make this presentation today. My plan is to speak for about 15 minutes and to leave about 15 minutes, if that's all I have left, for questions and answers. By this point in the conference, participants have heard a lot about a few things that I will skip over in the few minutes that I have. We will take as a given the following, and I'm going to share the screen now. Nope. Yes. Okay. Take as given the following. Excuse me. Huge and growing housing deficit in Rwanda and other countries. Number two, there are no needle-moving solutions that have been forthcoming. Three, housing finance is way too expensive to be helpful. Four, there is a dearth of bankable housing stock at prices that are affordable by the emerging middle class. So I want to talk to you for a minute about our guiding principles before I get into the detail of what we are introducing today in the tripartite holistic solution. I'm going to read through these 10 items, but as you can see, I've highlighted 4 of them, and I know it'll be difficult to remember all 10 of them. My goal is to get you to remember 4 of them. Number 1, we want to offer something that engages the private sector. Number 2, we want to request as little as possible from the government of Rwanda. They are busy governing, not driven by the profit motive, and it is not a wealthy government. 3, we want our enterprises to be sustainable and to create new and better ways to engage all sectors of the economy, especially the local capital markets. 4, home ownership is not the only way, nor the primary way, of getting people into homes. 5, all housing that gets created must be of bankable quality, otherwise it is a wasted investment. 6, we want to focus on not merely the home as the end goal, but rather the value of a good neighborhood and a sustainable community, environmentally, socially, and economically, in which the home is located. 7, it is very important that housing estates be located in reasonable proximity to centers of employment. 8, mom and pop solutions will not move the needle and cannot bring the affordability gains that are needed. We note that the mom and pop solution has been the African way for a long time. By the way, this approach is common to many emerging market countries, not just Africa. But it is time to scale up production of housing, investment in housing, and the granting of mortgage loans. Number 9, our end user clients are the emerging middle class, the backbone of any economy, not the urban poor and not the affluent. And point 10, the housing business in its various segments are scale businesses and long-term by nature. As we move to the slides that follow, this is a lot to remember. As I say, I have highlighted the principles that are most important for this presentation, and I leave it on the screen for a few seconds for the audience to absorb. The problem stems from a logjam, a misalignment, a broken feedback loop of economic motivations and cues. This needs to be addressed with vigor, boldness, and creativity, and repaired. What do we mean? Developers are not coming to market with large-scale projects because they cannot be sure that purchasers will get long-term mortgage financing, and because they also cannot be sure of complete offtake of their production. Banks don't engage energetically and at scale in mortgage lending because of the lack of bankable housing stock. And nobody on an institutional level and in industrialized quantity is investing in housing for the purpose of renting it out. As a result, very little home building is taking place. 2, no supply of rental housing on a commercialized basis is being offered to the public. 3, the mortgage credit that is on offer is very expensive, very limited in quantity, and not long enough in term to maturity. All this really sums up the core of the problem. Once understood, it leads to what the solution for right now must be. The solution. We propose the following: a holistic solution in 3 distinct pillars: housing finance, housing production, commercialized investment in housing, and realized via 3 new enterprises: a mortgage bank in the primary market, a housing developer, and a real estate investment vehicle, a REIV for us, not necessarily a REIT. And if anyone has a question, I'll be able to explain the difference. All this will be managed and coordinated via an overarching holding company to ensure honesty and coordination. The result will be housing production at scale, bankable, livable, and sustainable, mortgage credit available at reasonable prices, meaning small spreads to the funding cost, and in good quantity, and a modern, efficient, and commercialized home rental industry. The interactions and the overlaps between and among the 3 pillars are the real important aspects of our investment proposal. But first, before we can do that, let's delve into the details of these unique and special enterprises. The mortgage bank will be disruptive in a good and productive way and will differ from every other lender in the market today. Number 1, we aim to reframe the basic business model from large margin, low volume, to low margin, high volume. It will offer mortgage loans with longer tenors and lower interest rates by a wide margin than is currently available today. Number 2, it will not be a portfolio lender, but rather will seek to match long-term assets with investors who have long-term investment horizons. Thus, we will securitize, issuing MBS, all our mortgage production, and by doing so, we will create a bridge to the local and regional capital markets. Operationally, We will be the low-cost producer, utilizing high technology for marketing, origination, underwriting, and servicing. We will be specialized and focused, and we will be expert in what we do. The housing developer. We build only at scale. We will create sustainable communities in which the housing unit resides. The housing developer will achieve gains in full affordability through modern building techniques and technologies and through good urban design, meaning, among other things, higher density. Developers of any kind need to sell out the homes they build and don't want to hold inventory. Offtake is one of the major issues that demands a solution. The REIV, Real Estate Investment Vehicle, will be the first of its kind in Rwanda. It too will have a singular focus and be driven by volume. It will be a bulk off-taker for our housing developer and perhaps for others as well, serving the rental option exclusively. As we all know, most affordable homes are bought today by investors, and many of those investors have been individuals. It is time to commercialize, professionalize this industry, and broaden the ownership ranks of residential real estate to institutional investors. We fully expect that a very high percentage of housing production will be off-taken by the REIV. Let's move on now to the all-important interactions and overlaps. You see a schematic of the three pillars we expect to create. And you can see some of the explanations in notes of the overlaps. I'm going to go over them. The mortgage bank offers at least two lines of business that help housing developers. It provides development and construction finance to housing developers and long-term mortgage finance to all worthy, meaning underwritable borrowers on all underwritable properties, enabling offtake by buyers. The mortgage bank offers home loans to all qualifying borrowers, actively marketing its willingness and ability to serve all homeowners. This supports sales of homes by all housing developers and helps them achieve full sellout of production. The mortgage bank will supply housing finance to the REIV as a bulk off-taker and leverage the REIV's equity with LTVs in the 70 to 80% range. The housing developer. The housing developers can get development finance. The housing developer, our housing developer, can get development finance for itself and long-term mortgage finance for the buyers of its homes. The availability and affordability of this kind of financing reduces risk for the developer and encourages investment in housing production. In addition, housing developers can sell blocks of housing to REITs or our REIV and other similar investment vehicles for rental housing on a commercial scale and in a professionally managed way. Liquidity and diversification are distinct advantages to retail customers. This offers a better alternatives for families to invest in rental housing. REIVs can come to the mortgage bank for mortgage financing of its portfolio of rental units. This practice makes financial sense as it allows the investment vehicle to increase returns to investors through secured leveraging supported by high occupancy and solid NOIs. The REIV is a bulk off-taker of housing produced by worthy and high-quality developers, not just our own. Developers won't have to rely on purely retail sales to achieve sales targets. Improvements in affordability. This slide condenses the affordability gains from three pillars into one place and underscores our view of the importance of each of our three-pillar enterprises to be low-cost producers of what they are producing. I want to emphasize the following. Affordability gains come from multiple players, multiple actions, and multiple initiatives. This is the value of our three pillars operating the way we designed them and operating simultaneously and in a coordinated fashion. I think this is now well known and understood. The Three Pillars Initiative will be the living embodiment of this approach and change the way affordable housing is delivered in Rwanda and ultimately elsewhere. I'm going to skip 4 slides. We initially placed 4 slides on market-related topics in this portion. I have moved them for the sake of brevity to the appendix, and they'll be available to people who want to download this presentation. These topics are on the demand drivers, market scope, competition, and growth. As I say, they've been moved to the appendix. The topics have been discussed at length in previous presentations, so I don't want to spend more time on them now. And so I'm going to move on to the team. We are a group of individuals working together for the past 18 months, each with deep experience in all the areas of the Three Pillars enterprises, and with deep interest and experience in sub-Saharan Africa. We are currently in the middle of our investor marketing campaign. This is me. Why we will succeed when others have failed before us. The underlying rationale of Three Pillars, the solving of the logjam and the de-risking of one enterprise to the other, along with other reasons shown on this slide, are the reasons for our ultimate success. I'm going to skip to the next slide, and it's up here and people can read it as I'm talking, because I want to ready everybody, and in case if you are there, ready everybody for the Q&A session. I thank you for your kind attention, and I'm ready now to take your questions.
Hi, Michael. Thank you. Thanks very much for this. I almost feel like that I may just ask you to put up a couple slides as we talk.
Sure.
Because I have a few questions, but on the slide that you had with the three circles and the intersection between the three entities.
Yes.
That one, yes.
Yes.
Just to clarify, so that our audience understands, you're proposing to establish 3 new entities, or are you engaging at all with the existing entities in Rwanda?
No, these are 3 new entities.
And that on the slide, 2 slides later, is the reason for that is because the relationship between them is tied around the purpose, and that holds everything tight and would make it attractive for the investors. Is that correct?
That's correct. As I tried to point out earlier, there's a certain de-risking that goes on. Well, our housing developer will build housing, but we will have confidence in building that housing in quantity that, number one, there'll be an off-taker. If there are not enough people buying homes, or if there are not enough pre-sales, our Reeve will stand there ready to purchase what is not sold in the retail or in the purchase market, as an example.
I mean, the issue of offtake was raised in the course of these last 2 days. And yes. In fact, before I make this comment, I'd like to invite members in the audience, please do submit your comments into the chat, and I'll monitor them and we'll weave them into the discussion. But over the last day and a half, there's been a lot of presentations and made specifically by developers. And one of the problems they face more than anything, CFAR Development presented yesterday, and we'll go on a site visit of their housing tomorrow, is offtake, and that they can wait for 5-6 months before they sell their units. And the argument that was made that is about access to mortgage finance. So what you're suggesting here is that you're tying those things all together.
Right, and it's a virtuous circle, and one thing helps the other, and the other thing helps the other. We are telling everyone, and this is the way our business plan is written, that our mortgage banking operation will be disruptive. Part of the reason I think that it's difficult for people to access mortgage financing today is because the price is so high and the tenors are so short, making the monthly PNI very difficult for people to stand with. So, as I say, we need to change the paradigm for mortgage lending today, and we will do that. And as I said earlier, the way we will do that is by changing the way the business is done.
Okay.
Creating a bridge to the capital markets, becoming expert, using high technology, not holding a portfolio.
And in terms of the developers that exist within Rwanda, will the REIV engage with them, and will it offer offtake services for their houses?
The quick answer is yes. The longer answer is perhaps, because as I also pointed out, we're keen on the value of the home in terms of its environment, in the community, in the neighborhood in which it sits. Right? This might be difficult for a small developer who's building 50 homes in an area that may not be well located, or may not have a very sustainable environment.
Okay.
So that's why you could put an asterisk to that, yes.
But I presume then what you would do is you would create a standard that would become acceptable for purchase, for offtake the REIV would create that standard. And then if developers built to that standard, which is largely framed in the principles you had at the beginning of your presentation, then that might be an opportunity.
Absolutely.
That's
we are keen to serve the entire market. In other words, these three pillars are not built only to serve each other. Right? They will be how shall I say, much more successful. They will each thrive on their own as the market grows with our alongside our initiative. Sure, and we want the housing developer, for just as another example, to sell homes to all takers, but the takers don't have to get mortgage financing from our mortgage bank. It's an open market, and buyers can shop for the best deal that's available to them.
Which then creates the competitive environment that you spoke about, and that Rwanda clearly needs. Yeah.
Exactly.
We've got a question here from Robert Hornsby. And Robert Hornsby is from Jobomax, and they're a member of the African Union for Housing Finance. They're a developer. They work primarily in West Africa. And his question is that he can see that many of the gaps in the market have been set out in the presentation, and is interested in this tripartite solution, which I'm sure listeners will think that could apply in their countries as well. But what he's asking is, where are you on the spectrum from concept to fully realized solution? It's a good question. And what have the key hurdles been, and what are the key hurdles that you're grappling with?
Okay. We have business plans for all three enterprises, very detailed business plans, and we have financial models for all three enterprises with ranges of scenarios. And in the base case, we are very, very confident that the IRRs in each of them will meet investor standards. Okay? And now we are, as I said in another slide, in the midst of our investor marketing. So as soon as we raise the requisite amount of equity that we need to get these things started, we will jump in and do so, and we're anxious to do so.
Can you phase it, Michael? Do you have to jump in 3 all at once, or can you do 1 at a time?
No. Well, the answer is yes and no. We want to start all three enterprises together because they each serve each other in a market that really has no solid foundation to it right now. It's important for me to mention that we have chosen Rwanda as our entry point because Rwanda clearly has the best enabling environment for many of these things, especially for mortgage lending and for securitization. So we're keen to start all three enterprises together. Having said that, I want to add that we are also ready to start each of these enterprises in a staged way, depending on how much equity is made available to us along the way.
Okay. No, that's great. I think what we're going to do, we've come to the end of our time slot, but this presentation and this will be up on, we'll publish it. And I'm sure that there'll be much more interest in engaging around that. One last question that I have for you, Michael, though, is I was interested in the team that you showed. You clearly already have quite a lot of support within Rwanda.
Yes.
This isn't an external initiative. In fact, it's got quite a strong local root to it.
Yes,
Do you want to
it
talk a
does.
little bit about that before we close?
Yes, I'm actually, I'm not showing the slide now, is that right?
Not quite yet.
Okay. This is our team, and I'm proud to introduce all of them, but two of them, Michael Iduso and Eric Rudabana, are local Rwandans and well known in the Rwandan market. Michael is an architect and a housing developer. He's currently developing affordable housing in Rwanda, in the Kigali area. He's also famous, at least for me, in having built and delivered Kigali Heights under budget and on time, which is always a good thing in the housing production or in the building industry. Eric Rudabana is a well-known banking executive, and the other members, I can introduce them. One or two of them may actually be logged into this presentation. Jacques Steffens, Ken Bialik, Itzik Ben Basat. Ken has been engaged in Rwanda for, I would say, 10 years or perhaps more in the development of affordable housing in the inner core of Kigali, which is another alternative to building large-scale estates, which we are keen to follow. And my colleague Itzik Ben Basat has been involved in affordable housing in Angola, building, I would say, between 20 to 25,000 affordable housing units in, I would say, 4 to 6 separate communities over the past probably 10 years during his time as business development officer for Mitrelli International. So that's it. That's the team.
That's wonderful. No, it's really interesting. There was another comment on the chat that came from Olu Olanraju from Altair, and his comment was that the model is quite similar to the Family Homes Fund model in Nigeria. That model has sovereign backing,
Yes.
which is very exciting for Family Homes Fund, I'm sure. And that's a point, in fact, that their MD has made quite a lot, is that role of government support is really critical. And so you're presenting this here with good, strong Rwandan backing, not yet part of the government's plan, but I'm sure would be certainly welcome within the context of the objectives of Vision 2050.
Yes.
So I wish you well in this, and I really hope to hear more about it in the future and how you progress.
I hope we can report at your conference next year that we've started the enterprises and they're generating lots and lots of value.
Wonderful. Well, we could definitely use a good solution or set of solutions. So all the best, and thanks so much for joining us today and sharing all of this with us.
Thank you, and thank you to everybody for your kind attention.
All the best. Bye-bye.